Greetings, everyone. Welcome back to our channel, your go-to destination for all things finance. Today, we've got a game plan that's all about fast-tracking your wealth through a tried-and-true strategy: dividend investing. If you're ready to learn how to build wealth quickly, grab a seat, hit that like button, and let's dive into the art and science of dividend investing. Understand the basics of dividend investing. Before embarking on the journey of building wealth through dividend investing, it's crucial to have a solid understanding of the basics. Dividend investing involves strategically selecting stocks that pay out a portion of their earnings to shareholders in the form of dividends. These dividends can provide a consistent income stream and contribute to the overall growth of your investment portfolio. Dividend-paying stocks are renowned for their stability and reliability, making them an attractive investment choice for those seeking both income and potential capital appreciation. The allure lies in the consistent cash payments that serve as a dependable income source for investors. This steady stream of income is a paramount advantage in the realm of dividend investing, particularly for individuals aiming to accumulate wealth over an extended period. The combination of regular dividends and the potential for increased stock value creates a powerful wealth-building strategy that aligns with long-term financial goals. Select high-quality dividend stocks. Choosing the right stocks is paramount when aiming to build wealth quickly through dividend investing. High-quality dividend stocks are those issued by financially stable and established companies with a history of consistent dividend payments. Blue-chip stocks, typically found in sectors like utilities, consumer goods, and healthcare, are often preferred by dividend investors due to their track record of stability and growth. When selecting companies for dividend investing, prioritize those exhibiting a robust financial foundation, positive cash flow, and a proven track record of resilience during economic downturns. These criteria are integral to ensuring the reliability of dividend payments and play a pivotal role in optimizing the overall performance of your investment portfolio. A strong financial foundation indicates a company's ability to generate consistent profits, while positive cash flow underscores its capacity to meet financial obligations and sustain dividend payouts. A history of weathering economic downturns signifies a company's durability in challenging market conditions, instilling confidence in the continuity of dividend income. By meticulously considering these factors, investors can fortify their portfolios with stocks that not only offer attractive dividends, but also stand resilient amid economic uncertainties. Focus on dividend growth. While the current yield is an important factor, prioritize companies with a history of increasing their dividends over time. Dividend growth is a key driver of wealth accumulation in dividend investing. Companies that consistently raise their dividend payments demonstrate financial strength and confidence in their future earnings. Investing in dividend growth stocks not only provides an increasing income stream, but also positions you for capital appreciation. Over the long term, the combination of a growing dividend income and the appreciation of the stock's value can significantly enhance your overall returns. Reinvest dividends. One powerful strategy to accelerate wealth accumulation through dividend investing is to reinvest dividends. Many brokerage platforms offer dividend reinvestment plans, DRIPs, allowing investors to automatically reinvest their dividend earnings into additional shares of the same stock. This compounding effect can substantially boost the size of your investment over time. Dividend reinvestment takes advantage of the power of compound interest, where your earnings generate additional earnings. By consistently reinvesting dividends, you not only increase the number of shares you own, but also amplify the potential for future dividend payments. Diversify your portfolio. Diversification is a fundamental principle of investing that holds particular importance in dividend investing. Avoid concentrating your investments in a single stock or sector, as this can expose your portfolio to unnecessary risk. Instead, diversify your holdings across different industries and sectors. A diversified dividend portfolio helps spread risk and minimizes the impact of poor performance in any particular sector. While high-quality dividend stocks can be the backbone of your portfolio, consider including stocks from various sectors to create a well-rounded and resilient investment strategy. Keep an eye on dividend payout ratios. A critical metric to evaluate when selecting dividend stocks is the dividend payout ratio. This ratio represents the percentage of a company's earnings paid out as dividends. A lower payout ratio suggests that a company has more room to sustain and potentially increase its dividend payments. A sustainable dividend is supported by the company's earnings, so a conservative payout ratio is indicative of a healthier financial position. Monitoring this ratio ensures that the companies in your portfolio are well-positioned to continue providing reliable dividend income. Regularly review and adjust your portfolio. The financial landscape is dynamic, and market conditions can change over time. Regularly reviewing your dividend portfolio is essential to ensure that your investments align with your financial goals and risk tolerance. Periodic assessments also allow you to make informed decisions about whether to hold, sell, or add to specific positions. Adjusting your portfolio as needed based on market trends and changes in your financial situation is a proactive approach to wealth building. Be prepared to reallocate your investments to capitalize on new opportunities or mitigate risks as the market evolves. Consider dividend ETFs. If you prefer a more hands-off approach to managing your dividend portfolio, consider incorporating dividend-focused exchange-traded funds, ETFs, into your strategy. Dividend ETFs pool together a diversified basket of dividend-paying stocks, offering instant diversification without the need to individually select and manage multiple stocks. Dividend ETFs often come with lower fees compared to actively managed funds, making them a cost-effective option for investors seeking broad exposure to dividend-paying companies. Research and choose ETFs that align with your investment goals and risk tolerance. Be patient and think long-term. Building wealth through dividend investing is not a get-rich-quick scheme. It requires patience and a long-term perspective. Resist the temptation to react impulsively to short-term market fluctuations. Instead, focus on the fundamentals of your investments and the long-term growth potential of your dividend-paying stock. A patient approach allows you to benefit from the compounding effect of dividend reinvestment over an extended period. While market conditions may vary, a commitment to a long-term strategy can help you weather volatility and capitalize on the consistent income and growth potential offered by dividend investing. Seek professional advice. If you're uncertain about which dividend stocks or ETFs to choose, or if you want personalized guidance tailored to your specific financial situation, consider consulting with a financial advisor. An experienced advisor can provide insights into market trends, help you define realistic financial goals, and assist in creating a dividend investing strategy that aligns with your unique circumstances. Financial advisors can also offer guidance on tax implications, retirement planning, and other aspects of your overall financial picture. Having a professional on your side can enhance your confidence in your investment decisions and contribute to the overall success of your wealth-building strategy. In conclusion, building wealth through dividend investing requires a thoughtful and strategic approach. By understanding the fundamentals, selecting high-quality stocks, focusing on dividend growth, reinvesting dividends, diversifying your portfolio, monitoring payout ratios, regularly reviewing and adjusting your holdings, considering dividend ETFs, being patient, and seeking professional advice, you can create a robust strategy for wealth accumulation through dividend investing. Remember, success in dividend investing is a journey that rewards discipline, informed decision-making, and a long-term perspective. And there you have it, Savvy Investors, a comprehensive guide on building wealth through dividend investing. If you found this video helpful, don't forget to show some love by hitting that like button and sharing it with your fellow investors. Your support means the world to us. For more deep dives into personal finance, investment strategies, and wealth-building tips, make sure to subscribe to our channel and ring that notification bell. Remember, the journey to financial success is ongoing, so stay tuned. Until next time, keep exploring,